ever really think about just how important insurance actually is? We give so much credit to the risk and decision-making process that we can sometimes forget how valuable having a safety net can be. In finance, being able to work without worrying that you are going to lose everything is key to success, and it's ultimately the point where you can start making the most money. That's why today we are going to discuss and break down just how people like you are building financial safety nets through their insurance programs. So make sure to stick around until the very end of the video if you don't want to miss a single piece of potentially life-changing advice. Number 1. Think of insurance as an airbag. Insurance isn't just some magical sort of thing that protects you from anything and everything life can throw your way. No, think of it more as a piece of the puzzle, and the piece that protects you from the initial boom. Good insurance is going to cover your mistakes, but it isn't going to free you from all responsibility. You shouldn't ever rely on insurance to fully protect you from a fall just to make it easy to survive. The second component you need to have in order to build financial security is some amount of savings. This account should be used to protect you from having to turn to loans or take on unnecessary debt, and otherwise shouldn't be an account you regularly access. Number 2. Don't skimp on the research. Insurance can cover an awful lot in your life. Home, car, life, the list goes on and on. For every item you get insured, though, you should be very careful about doing the proper amount of research before pulling the trigger. Insurance isn't the most exciting kind of studying you can do for sure, but it can save you an awful lot of money down the road. If you're serious about protecting your financial future, it isn't enough to just have insurance. It's also about having the right kind at the correct price. Number 3. Know what you are covered for and what you aren't. Did you know that one company's insurance policy can be very different from another's? This creates both issues as well as opportunities for you as a consumer, which means that you might be able to take advantage. For example, when it comes to car insurance policies, most will be quick to say that you are only covered if it is you driving the car during the time of the accident. While this is true for a handful of those companies, it isn't true for most of them, and car insurance is usually tied to the car itself and not the driver. If you don't really know what you are covered for, it doesn't matter how good your insurance is because you won't be able to access it. No insurance company is going to want to point out places where you can be saving money, and so it's up to you to know your rights when you sign that contract. Number 4. Drive up your credit score. Insurance rates are largely determined by factors such as credit score, and so if you feel like you aren't getting a fair rate, you may have to improve your credit score before things will start to improve. There are a lot of ways to do this, but it mostly comes down to demonstrating proper smarts with your finances, especially when it comes to spending only what you have and always on time. If you really focus on it, you can improve your credit score considerably in the matter of just a year or two, and it could be even faster if you have a pretty clean slate. If you do end up improving your credit score by enough points, then you should talk to your insurance agent immediately. A lot of times you will be able to negotiate a better rate for yourself, and it will save you hundreds or even thousands annually. This piece of advice would definitely fall under the doing things the right way category, and is the most common advice you would get from someone affiliated with an insurance company. That being said, it relies a lot on the good nature of the insurer themselves, which is not always a guarantee. Still, improving your credit score is not just good for your financial future, but can also open up a lot of doors too. Number 5. Choose your belongings carefully. We'll get to that in a second. I have a favor to ask of you. If you like this video so far, please subscribe to the channel. When you buy a new car, home, or really anything, the last thing you're thinking about is how much it's going to take to insure it. Unfortunately though, even your favorite toy or treat yourself purchase may quickly become your biggest regret because of the insurance. Take cars, for example, where the model of the vehicle can radically change what kind of rate you get. Factors like where you live, what kind of car you drive, and how many children you have will start to alter what kind of rates you're going to be looking at. And so it's important to weigh all of those decisions carefully. It's impossible to keep your personal and financial futures separate forever. And as you start to get into buying different kinds of insurance, you really start to see the two worlds bleed together. Number 6. Accept that it's not always going to work out. This probably sounds more morbid than we mean it to, but what we're trying to say is that stuff is bound to happen. The difference between our dream life and the real one that we actually live in can sometimes be a little farther apart than we would like it to be. but we also can't be too hard on ourselves either. If there's one thing that everyone on this planet can agree on, it's that life can be unpredictable to say the least, and there's no way to know just how things are going to shake out. When you are creating insurance plans and protecting yourself the best you can, it can be easy to convince yourself that you can defend against everything, but that's not always realistic. Instead, just try to do the best that you can and take a little bit of time every day to take a look at your financial status and make plans according to that. Number 7, don't try to risk it. Going without some sorts of insurance for extended periods of time can actually be illegal in many places, and it is an urge that you should not really humor. Every year, people risk not paying their insurance for their car, only to be fully responsible for an accident that occurs the next day, or they don't insure their home and a natural disaster occurs. The point here is that people get insurance for the unthinkable, and these kinds of things can strike at any moment. Going an extended time without the proper insurance sets you up for massive financial heartbreak, as you could be fully responsible for massive payments. If times are tight or things are tied up in assets, make sure that you at least get the bare minimum in order to somewhat protect yourself from accidents. Even if you are only able to make a small payment, you're still doing more than hoping that the world is kind to you that day. Number 8, look for discounts and opportunities. Insurance sets you up for success in the future because it protects what you already have. Because it cannot set you up to get anything, it can be kind of hard to view it as a way to be successful, but maintaining wealth is usually more important than building on top of it. Cutting down the amount you pay for insurance increases your opportunity to make money on things like stocks, investing, or crypto, and you can do these if you are vigilant and tech-savvy enough. Insurance companies will often run promotions to hook in new customers, but veteran consumers are almost always welcome to join in too. An old example of this is the tracker to see how consistently safe you drive. This opportunity was mostly just to give people a way to save money actively on insurance, and you can really take advantage of these sorts of opportunities to decrease costs in a big way. Number 9, always keep the ability to walk. Your ace in the hole as a customer is your ability to walk away if things aren't going your way. And just like they always say, you speak with your wallet. The tricky thing about insurance is that you have to sort of sign up for a contract to start your coverage plan, and these contracts really want to rope you in for the distance. Many insurance companies will include short-term value for long-term allegiance, and this is also something that you should be careful about. Even if they offer to give you coverage for the first 3 months free, you could be paying in the way of an unfair 3-year deal you get locked into. Buyer's remorse is the absolute worst, and it sucks to be tied into something when you see other people taking advantage of far better deals. Be stingy with your time when it comes to insurance companies, and don't let them rope you into something long-term if you can help it. Your financial freedom is tremendously important, so make sure to remember that. Number 10. It's a marathon, not a sprint. Probably the best thing that you could do when it comes to your money is realize that the amount you have now doesn't really determine your future value in the slightest. You could have a lot of money but have no upside in terms of revenue, or you could have very little but the future can look really bright. Be patient when it comes to your insurance, as it is a very important piece of your financial puzzle. Insurance is the closest thing you get to a do-over when it comes to money in this world, and it can get you out of trouble before you can even register that it's arrived. So remember, it's a long-haul kind of journey, and making the smart choice, the safe choice, is sometimes the best thing you can do with your income, even if it isn't the coolest. How have you built your financial safety net? Let us know down in the comments section. If you enjoyed the video, please leave a like and consider subscribing to our channel if you like videos like these.